Welcome back everyone to another stock review on Ang's channel. Today we'll be looking at Moody's Corporations. The ticker name is MCO, so without further ado, let's get right into it. So looking at the chart for MCO is signifying that the company is actually in a bullish market. So pretty much that the company is actually earning a loss and have high expectations. However, right now we are facing a difficulty of breaking through the all-time highs. So right now, if this company is going to break the all-time highs and continue to go higher, so we'll be basically identify the reasons behind, as well as to go through their financial fundamentals, as well as the economic mode score. So over here we have the Moody's revenue. We are looking at a very consistent and increasing form of revenue, signifying that their growth as well as increasing sales of this company. And as for the net income for Moody's, it's also in a similar pattern, which is in a increasing and consistently form, will also determine its ability to provide profits and has higher predictability. However, the situation of this starts to reduce in the year of 2021 and slowly recovering since the 2023, and we are hopefully to see better improvement in terms of their gains as well as profit generations. So right now, let's look at what does Moody actually do. So it's a global integrated risk assessment firm, best known as one of the big three credit ratings agency, so alongside S&P Global. So this company is divided into two sections, which is the MIS, Investor Services. This is the flagship credit rating agency, provides rating on the creditworthiness of debts, issues, as well as structured finance products. These ratings are used by global investors to assess risk. Another one is going to be their Moody Analytics, so provides financial intelligence and analytic tools. It sells economic research, data, risk management software, and also focus on areas like know your customers, credit organizations, and so on. So their main income stream is going to be their investor service, which is to their largest driver, earns fees from issuers like corporation or governments wherever they issues new debts in the capital market, and the company is paid to provide a rating for these new financial products, and this revenue is cyclical, depends on the health of the global economic recurring revenues. And second of all is going to be, as mentioned, the analytics. So this is the primary driver for this segment, sells subscriptions to its vast database, research, and creates high, stable, and current recurring revenues stream. So according to their strengths and weaknesses is that it's a highly wide moat and strong brand and reputation. So Moody's name is synonymous with credit risk and is a globally trusted standards for investors, high profitability, as well as diversified business model due to the fact they have recurring revenue on both the analytics as well as investor services. So for their weaknesses is the cyclicality. The largest and most profitable segments is highly dependent on the health of the credit markets. And second of all is regulatory scrutiny, as a powerful gatekeeper of the financial system is under constant and intense regulatory oversights. So it faced significant criticism for its role in the 2008 financial crisis for giving high ratings to the risky mortgage-backed securities, and this risk of new regulation or litigation is always present. And reputation risk is that their company's entire business is built on trust and reputations, whereby investors can trust on their information, their data, their research, as well as the ratings that is being provided to those new financial products or credit ratings, which is important for a lot of investors. And if the company has low trustworthiness, most likely they won't receive any business, and people will just ignore whatever the ratings they provide because it's useless and worthless. So after looking at Moody's Corporation is one of the company whereby they will be able to provide recurring revenue and can be highly dependent on the health of the economic credit situations, and also it's still a company that is able to generate more profits in the long run, as well as with high economic mode scores and with the strength of high trustworthiness by the investors, and people will actually look and use their insights of their research and data, risk management, as well as ratings to be as a reference for future investments, as well as economic health situations. So over here, we are looking at the profit margin for this company. It's also in an increasing form, staying above or reaching 30%. So for the balance sheets, we'll be able to find the total so in the balance sheets, we'll be able to find the total current assets sitting around 4,600, and for their total current liability is 2,500. So it's almost 2 times of their total current liability, signifying a safe zone for MCO. And also we have the net cash is in the negative form, so they have more debts than their cash. So in the ratios, we have the PE ratio at 38. This is slightly overvalued, but it's actually in the range of fine, as well as for PE in 30, signifying the valuation of the company is just fair value and so on. And we also have the debt to equity ratios, which is at 1.81. So this can be one of the concerns for me because the company has more debts in the situation right now. However, it's in a form of decreasing, meaning that they're trying to decrease their debts as well as to increase maybe in terms of their cash. And for their ROE, the company is being able to manage above 15%. However, this huge drawdown decreasing from 136% can be a concern, but as long as the company staying above 15% for quite a long time, which is 4 years already, is actually quite significant and showing the strengths of the company in terms of bringing returns. And we also have the ROIC in increasing form, steadily staying above 15%. Lastly, we'll be looking at the economic mode score for the Moody's. So it has signifying have very strong in terms of their regulatory entrenchment. So we also have the ratings from Morningstar's rating at wide mode, Guru Focus at strong durable modes, and Seeking Alpha at wide and resilient mode. So also have the mode score recommendation by our AI system, which is 9 out of 10, signifying Moody's Corporation has holding a wide mode positions. So overall, this is a company whereby it has great revenues, recovering net income, as well as high ROE, ROIC. One concern can be the situation of high debts, which is more debts than their cash. However, they do achieve high wide mode with a mode score of 9 out of 10 by websites as well as AI ratings. So overall, I do think that this company is one of the high quality companies that will be able to generate in terms of long run, and especially in the case whereby they have experienced situation of 2008 financial crisis, making them one of the company that have experienced this kind of crisis and will be able to stand and strengthen their regulatory systems. From there on, it will be able to provide better services in the future. And I do think that right now the situation of this company is in a fair value, however it's not cheap enough yet to buy. So in my stance, I would actually wait for it to retrace back or in a discounted situation before I start purchasing or invested in this company in the long run. So right now I will just stay and observe, and if there is opportunity of buying the dip, I will do so. And I do hope that this video helps, and if you are interested in this company, do your research and due diligence before you make any money decisions on investment as well. So I guess that is all for today's video. So if you like my video, you can help me by subscribing my channels, liking the videos and share it out. So I guess that's all for today's review. I will see you guys on the next one. Goodbye.